What's going on, guys? Corzi here from Black Swan Enterprises. Today I'm going to be showing you guys one of my favorite indicators to use while using technical analysis. These are the simple moving averages. For me personally, I use the 200 simple moving average, the 50 simple moving average, and the 20 simple moving average. What the simple moving averages are is the average of the closing price over a specific time period. So as I just said, the specific time periods that I currently use is the 20, 50, and 200. One of the strategies that I use with the simple moving averages are the crossovers. So for this example, I'll be using the 20 and 50-day simple moving average crossover on Tesla. For example, on Tesla, the 20-day moving average is my blue line, and the 50-day moving average is my pink line. So right here, you can see that this 50 moving average is, or 50 and 20 moving average is kind of just consolidating right here. And once this comes down and makes this crossover right around this level, right here where that oval is, you can see that once it makes this crossover, the stock ultimately makes it moves down. It tries to reverse a little bit, ultimately gets rejected at the 50-day simple moving average, and continues to go lower. As you can see, there are some bounces here, but the 20-day moving average still has not crossed back to the upside. And as you can see, it also uses these moving averages as support resistance lines. So you can see here, it tries to come up, gets resisted, and ultimately makes its way back down here. You can see this bullish candle right here, but the sellers ultimately step in and drives the price lower. And even until today, the EMA or the SMAs have yet to cross, and here we are on Tesla. So for Tesla, while using previous support resistance levels, I'll know where Tesla tends to bounce off and reverse on, but I will also be waiting for this 20-day simple moving average to curl and then ultimately crossing with the 50-day moving average, resulting in me possibly entering on the position based on looking at other indicators. Now I'll be using snow on the 4-hour chart as a different example to show you guys another crossover strategy using the 50-day simple moving average and the 200-day simple moving average crossover. As you can see in the previous video with the 20 and 50 crossover, we were on the 1-hour. Now we are on the 4-hour. I like to use bigger time frames while looking at bigger time periods. For example, the 50 and the 200. So right here you can see that the price was above the 200 and the 50 and the 20. Once this 50-day simple moving average crosses to the downside of the 200-day moving average, the price ultimately makes a move down and struggles to come back up until this crossover right about here, where it goes up, but then yet again it consolidates. So that's why you want to wait for a clean cross, a clean break, just like support and resistance. You don't want to rush into anything, because right here you can see it consolidated even after crossing and ultimately makes lower lows from this previous spot. To learn more about specific trading strategies that me and my team use, make sure to subscribe for more educational content and click the link in our description to join our free Discord community today.